That is the demise of the paper system. Because people are beginning to understand why you should hold gold. And as I say, China has basically cornered the market. Call it the physical market. They've cornered that in effect. So where does that leave paper? Well, I mean, paper's just a bunch of promises with nothing to back it. It's not gold. It's credit. And, it's credit which, so long as the counterparties are solid, then you could say that the paper is a gold substitute. But when we see the fiat currency system coming under huge pressure and looking at the end of the whole fiat currency system, then all these paper promises are going to turn out to be worthless. And I was talking about the World Gold Council. I was slightly amused. I mean, I think they've rather lost the plot. Either that or I've lost the plot. It's quite possible. I would question whether you're even going to get the liquidity over there. I mean, basically, the history, if you like, I mean, the more recent history, following our very successful gold standard, back in the 19th century, the history of the 20th century is that central banks grab the gold and they won't part with it at all. The idea that they're actually going to go on a gold standard and, say to all comers, we'll exchange our currency at a rate which is as follows. And, if you're not happy with our paper, then come and exchange it. I think we're an awful long way from returning to those days. You're not going to get liquidity being released from the market. I think that's the key thing. And the reason I mention household savings is that, these guys are just as human as you and me. They see something going up and they chase it. They're not going to say, "Oh, thank God, I could make a bit of a profit here." Unlike some of our Western investors, who take a rather different view. Just let the figures sink in for a moment. If you're talking about 30% household savings rate, you are talking about $5 trillion a year seeking an investment.
Mm-hmm.
How do you accommodate that? I mean, the Chinese economy has been growing pretty well. I don't buy into government analysis of these things and macroeconomics. It's a load of rubbish. It gives you no idea exactly how things are really performing in China.
One of the key barriers to reviving gold-based standards lies in liquidity. Physical gold markets cannot easily deliver at scale and speed to meet modern global financial flows. Many who saved at household or institutional levels are chasing the asset once it trends upward rather than simply holding it for long-term reserve purposes. For example, economies where household savings rates exceed 30% yield immense potential investment demand, possibly in the trillions of dollars annually. When a currency system attempts to back itself with gold, the question arises, where does the liquidity come from, and how is it mobilized in a timely way across borders?
But, I'm sure that some of that would be, in capital investment, it's bound to be. I mean, because the economy works there, it works pretty well. I mean, much as our analysts, macroeconomic analysts in the West hate it, they hate this proof that they're wrong. But, what the Chinese are now doing, and this is fascinating because having cornered the market, they're now saying to their friends, that's not us, by the way. I'm talking about the Shanghai Cooperation Organization and also BRICS. Saying to them, look, we're opening vaults, SGE vaults, Hong Kong, Saudi Arabia. I heard, I saw something yesterday, India. I can't substantiate that, but it wouldn't surprise me at all. And also throughout Southeast Asia, there will be exchange facilities whereby you can swap Chinese yuan for gold and vice versa. The only thing we don't have is the rate at which it might be fixed in the future. But you can see that they're setting up a network, if you like, for governmental settlements. This is not going to be available to citizens, I believe. I don't think so. I can't see it. But it will be available for governments settling their trade imbalances. And I think the point about it is that it will make the yuan attractive if you like, as a foreign currency. The other thing is that they are setting up a process whereby if you're going to, let's say, sell South African rand to buy Indian rupees, at the moment you have to sell your rand to buy dollars, sell the dollars to buy rupees. They're cutting that out completely.
Mm-hmm.
This is going to release foreign exchange commitments, which, according to the Bank of International Settlements, they reckon is around about $80 trillion. We're talking about the dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing. But everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now. And I really can't see how this one's going to be resolved without many, many eggs being broken. I really don't.
Over recent years, the People's Bank of China, PBOC, and other official entities have steadily raised their gold holdings, part of a deliberate diversification away from dependence on the U.S. dollar. China is moving beyond simply accumulating gold. It's building infrastructure, offshore vaults, trading hubs via the Shanghai Gold Exchange, and networks of bilateral settlement in gold and yuan across Asia. These initiatives suggest a symbolic shift in reserve strategy. Gold isn't just a hedge, it is quietly becoming a geopolitical tool.
And I think what you're saying here is not that gold's going up. It's just requiring more of these D-based fiat currencies to buy this same ounce. So if I'm a seller of gold, what is my offer price? My offer price is based on that equation. And also, if I see, if there's two fixes now, competing fixes in Shanghai. And the funny thing is, I don't know if you saw, you must have seen that Bloomberg article, I think last Tuesday, threw the cat amongst the pigeons when they came out and stated that China aims to become the custodian of foreign sovereign gold reserves. And then they went through this article was excellent. And it's all the things you've been saying. I mean, a long time ago, it was all a conspiracy theory. Oh no, well, that couldn't possibly be happening. Of course it was. But the amusing part, what really amused me, was the World Gold Council followed that up with a link that showed that gold trading volumes in London still dwarf Shanghai. Give your head a shake. I mean, you're talking about the 600 tons of gold that shuffles around, unallocated gold that shuffles around the books of these banks, when you've only got 3 to 5 tons actually settling physically at the fixes. It's a farce and on the other side of the equation, you look at roughly 450 tons or whatever of Shanghai gold moving around, but it's physical. It's real physical. And I think on one day, we saw, and I don't know if you've seen other days like this, but one day we saw 53 tons entering the warehouse. Now, this is physical gold, as you say. So there's an offer that was hit to take that into the vault. And as you say, it's not coming out again. It is. So it made me laugh, and I think it's sort of amusing, sort of almost a meme that they put up this chart showing this tiny little line where Shanghai was. Well, I'm sure you saw it. You must have had a shot.
No, I didn't see it, but I'm perfectly aware of what you're talking about. I mean, because
what if currency is just credit and gold is the ultimate tangible store of value? Many analysts now argue that paper currencies backed only by trust and state guarantee face increasing challenge when physical assets like gold gain strategic reserve weight. When governments or institutions lack full transparency, the value of those promises may erode. The contrast here is stark. Physical gold cannot be printed, but paper currency can be expanded at will. When central banks and other large-scale actors shift their allocations, the credit-only foundation of fiat currency faces structural pressure.
Really what we're looking at is the demise of the paper system. Because people are beginning to understand why you should hold gold. And as I say, China has basically cornered the market. Call it the physical market. They've cornered that in effect. So where does that leave paper? Well, I mean, paper's just a bunch of promises with nothing to back it. It's not gold. It's credit. And, it's credit which, so long as the counterparties are solid, then you could say that the paper is a gold substitute. But when we see the fiat currency system coming under huge pressure and looking at the end of the whole fiat currency system, then all these paper promises are going to turn out to be worthless. When I was talking about the World Gold Council, I was slightly amused. I mean, I think they've rather lost the plot. Either that or I've lost the plot. It's quite possible. I think what basically, they've been working with the LBMA to get every bar registered, and this is just PC stuff. I mean, what's China going to say about this? I think there's an old-fashioned Churchillian expression. Something like that, but the other way around. And where's all the gold? Well, it's flown. And then the latest thing was the World Gold Council saying we're going to digitize it, which I think is a sort of buzzword, and I sort of think, they really haven't got the plot at all. The idea of digitizing it, I mean, but you see, to be fair to them, they're looking at a market which is exclusively the investment management industry. And so, they're trying to think like investment managers, which is the wrong way to think. I mean, they've missed that boat completely. So I think the whole thing is that it's a bit of a farce, really. I mean, don't get me wrong. I do like a lot of what the World Gold Council does. I mean, particularly its work on statistics and things like that, which we know are incomplete, but their statistical stuff can be extremely useful. For example, they collect very detailed statistics on ETFs, that sort of thing.
Record high purchases of gold by central banks worldwide reflect this broader trend. According to data from the World Gold Council and Central Bank Disclosure, gold now makes up a meaningful and growing portion of reserves. Emerging markets, in particular, are less inclined to risk being caught in dollar-centric systems, driven by past episodes of sanction risk and frozen assets. The consequence, a gradual but real structural shift in how reserve currencies work and how gold operates as a bridge across financial blocks.
They're also, now that you can't get daily fixes without having to pay some horrendous amount of money to someone or other, they've stopped even doing that. But you've still got prices going back to 1978. I actually managed to go back further than that, but that's because I'm a bit weird, I think. But it's our institutions. I mean, the broader point is that our institutions are no longer fit for purpose in this market, and anyone who's guided by them is making a horrid mistake. I really do think so.
Yeah, and I think there's so many clues that really this paper versus physical battle is now, as far as the West is concerned, in the rearview mirror. Because, and what really struck me as amusing, Alasdair, the last time that we saw a margin increase in gold to 17,000 was in November 2024. And guess what had happened? The price had risen and risen and risen. And as was always the case, okay, let's put a margin increase in. And guess what? All these leveraged spec longs, out they go. And you've got like I think $250 or $300 rinse out until they were all gone. And that was the game. What cracks me up though, here we are, and we're talking, $1,300, $1,400, $1,500 higher. No margin increase. And I believe the only reason there's been no margin increase is because the shorts are on the hook. And a margin increase would devastate the shorts. Because anyone with that much credit, it is credit essentially, that much credit in a price rise of close to $1,500 bucks, it can absorb the odd little margin call. So you put a margin call, it's not going to rinse many longs out, but it sure as hell will literally. And we do know, because we actually, if you think about it, you look at the charts.
Record high purchases of gold by central banks worldwide reflect this broader trend. According to data from the World Gold Council and Central Bank Disclosure, gold now makes up a meaningful and growing portion of reserves. Emerging markets, in particular, are less inclined to risk being caught in dollar-centric systems, driven by past episodes of sanction risk and frozen assets. The consequence: a gradual but real structural shift in how reserve currencies work and how gold operates as a bridge across financial blocks.
And you see a series of higher and higher and higher stair steps. And we all know that it is the physical markets, which coming from China, etc., are being set in outside of the RBMA, that are actually underpinning those rally points. But it's so interesting, because I think that's why every now and again, and we just had another Bank of International Settlements squaring. Now, at the end of each month, there's a squaring. It was actually exactly $409 an ounce higher than the last squaring. $409 an ounce. Now, holy smoke, someone's borrowed derivative gold, and there's still 30 tons outstanding. We all believe, I mean, my assertion is if there's only one short in the market, it's the Fed. Who else? There's no bullion bank we know of that is short gold for their own book. So $409 it's going to be like 4 billion or something in losses for the 30 tons still has to be repaid. And they only repaid 4 tons last month. It's still outstanding. So it's really interesting.
Well, that is interesting. The other thing that fascinates me is that the futures market is being used as a means of delivery. I mean, I don't know if you saw, but the stands for delivery yesterday were, I mean, in gold, it was something like 66 tons.
Yes, it was.
Just in one go. Silver was
still
huge.
24 tons. Still 24 tons to sell to deliver.
Yeah, and silver was huge too. I mean, that was 1,500 tons or something. I did work it up. I can't remember what it was. But this is enormous. I mean, what it means is that the gold that's been delivered this year, or stood for delivery, this year has totaled about $950. 950 tons this year alone. And if we're looking at silver, I think the figure is something like 12,000 tons. I mean, these are enormous numbers. They really are. And you're looking at, in the case of silver, you're looking at something like 58% of global mine production. Which is what, 800 million ounces. I mean, this is what is going on. I mean, you've got to go and buy a future in order to get your bullion. This quite clearly shows that there's nowhere else you can go and get it. Now, that having said, I do understand that the retail market is slightly different. And there are interesting cross currents there. I mean, I understand that, Krugerrands are readily available and in great big quantity. And when it comes to kilo bars, I mean, you can buy those quite easily, sort of 1, 2, 3, 10, whatever. That's absolutely no problem. But as soon as you go out and beyond that sort of the wealthy retail market, as it were, it then gets extremely difficult, as I understand it.